that, then you make a multiple of $1 million a year. 2 minutes before the 60-minute bar closes, and right now the fight is over how big the tail will be on top of the bar. In other words, how bullish will the bar be? Right? Will it close on its high, making it more bullish, or will it have a tail, increasing the chances that today will end up as basically a doji day, trading sideways, maybe closing near the open, maybe closing near the high, and setting up for a possible island bottom tomorrow, if we gap up tomorrow. So daily chart, we had a gap down today. If we gap up tomorrow, that would create an island bottom, and it could lead to a rally. You can see the final minutes of the 60-minute bar, putting a bigger tail on top of the bar. So we ended up with a bull reversal bar, a close above the middle, a bull body, but a big tail. So more of a doji bar, more of a trading range bar. Looks like we're probably going to test down here, maybe back below the one high, maybe back to the open, maybe below the open. $60-minute bar, reversal bar, bear breakout below a bear channel. Let me put up the 60-minute chart. But we closed below the channel and below the high of the bar. So yes, a good reversal, but not nearly as strong as it could have been, which is, I guess pretty much what I expected. We tried to close the gap twice, 7 and 9. So if the market fails to go up, it usually tries to go the other way. I suspect that we're going to be sideways for all day at this point. Right now I think 80% chance we've seen the low of the day, and maybe 50-50 that we've seen the high of the day. Here's the middle of the day's range, so around the 5 low. It's around the open. I drew that earlier. Let me go back using the open of the day. We got close to a measured move based on the open. That makes the open an important price, and any important price is a magnet. Bonds look like dead money. Right. Big up, climactic, the biggest bar probably in a year or two, maybe 5 years, so you have to be thinking, is it a buy climax or is it a measuring gap? It turned out to be a buy climax. We reversed strongly on 3, and now we're small and sideways. So bonds might be dead money. In other words, we may just go in a tight trading range, possibly for the rest of the day. But clearly a very important reversal. Here's the daily chart. Huge reversal. An obvious point will be the midpoint of the bar, right? That will be a magnet going into the end of the day. We'll probably stay around that midpoint. So where will the bulls come back to buy? We're in the zone around the open of the day. Open of the day, almost exactly in the middle of the day's range. We reversed down at a measured move, so open of the day, the market's paying attention to the open of the day, and it looks like it's going to go down there and test it. Gap, 13 closed below 11 low, so possible measured move down, either from this double top or from this gap. Can the bulls buy here and scale and lower, since 80% chance that we've seen the low of the day? They can. I think it's probably better to wait to see if they get a stop entry buy. You know, you have to trade so small unless you're trading options. For the bulls, 2 legs down, 10, 13. You can argue wedge bull flag. We went down on 7, 8 for the first push, and then 11 and 13. We're in a support zone, right, the middle third of the bull leg. I know it may not look like a wedge, but on a smaller time frame chart, this is a push down. Let me take a look at the 1 minute chart. See, first push, second push, third push. Double bottom with 6. Fell a little bit below 6, a little bit below 1. Trading range behavior, falls below support and then tries to reverse up. Right, trading ranges usually do that. They get the bears hopeful, falling below support, but then they reverse up. For the bulls, it's a higher low major trend reversal, and certainly an okay swing buy. It's possible that we get leg 1, leg 2 up to the top of the channel, which is the target for the bulls. Right now the issue is whether or not we'll get above today's high and yesterday's low, and that, I think that is not clear. We'll get some information with the close of 14. Will it have a conspicuous tail on top, making it a less reliable buy, or will it close on its high, increasing the chances that we do get a leg 1, leg 2 move up? So swing by above 14 for the possible leg 1, leg 2 move up. Chances are that will not happen, but it might. If the first leg up went above yesterday's low, I think the odds that we'd get the leg 1, leg 2 measured move would be higher. Prominent tail lowers the probability that this will be a profitable buy. It's still an okay swing, but the probability is not very high. Risk is small, right, to below 14. So you can say, wow, that's 5 points. It's small relative to the current price action, right? And the reward is huge. The reward's 20 points or more. Higher probability, you wait for the upside breakout. If it's big, buy the breakout. If it's not too big, you wait and you buy a pullback. I still think we're always in long, but we're in a pullback, a bear channel, and it may, I think we may end up in a trading range today, which means we may pull back much lower than what anyone believes is likely. So we may even get below the 4 low. I don't know. So can you short below 15? You know, you can do it for a swing. Everyone knows that the dominant feature of the day is this bull reversal. And until the bears do something comparable, the bulls are in control. So shorting too low is a low probability bet, but the bars are so big, there's plenty of room for a profitable short. I think it's not a high probability short. I think we're trying to create a higher low major trend reversal. But the pullback can go a long way. You know, it could be an endless pullback. We could just pull back all day. their channel,